All right, everyone, a very warm welcome to all, and let's quickly have a look where we are right now as the sentiment point of view, and we will go through each section of the markets from going through from equities, going from commodities, what has to say the bond market, and also we will go at the end of this video FX pace. So starting from equity, it's pretty much mixed bag across the board. If we look at the Asia Pac, China is just been softer as its prior session, and if let me just look at the timely chart. Look at this.
So
Nikkei,
just a reminder, that's at
Hang
8
Seng.
Eastern Time. We do expect the
Just
release of OPEC's monthly report.
okay. So sorry about that. So again, Asia Pac, as I said, is pretty much mixed across the board, leading with the Nikkei 250 up by 1.62%. However, looking at Hang Seng and other China A50, both are down by almost marginally. So it's not a bit of mixed bag. Started with the Asia Pac, following to the EMEA. It's just showing a pretty much nice sign of risk on. Market has modestly moved into a green side after having a really nice losses from last session. Looking at Germany A30, Germany 30, Europe 50, 50 100, all of them showing a really one-sided volatility. Now, talking about S&P 500, Dow Jones, Nasdaq, it's a really nice move we are seeing on these U.S. equity market. Uh, After the recent comments from the Powell we had yesterday, and also we are having those comments today again. So the market has really priced in, or let's say took it as a neutral bias. He didn't give us anything specific about the policy. He just kept saying that labor market, if it gets unwanted losses, then they can lower their rates. And he said inflation has shown really good sign of cooling, and more data what they need to confirm that inflation is heading to the right path. So those things really helped the North American equity market to just head upward. It just gave another reason to buy the equity market. Now, moving to the commodity section is pretty much doing great. Looking at the gold has shown nice pullback from retesting this key sport level, 2350, and copper, silver showing the same story. Base metal, iron ore is just moving to the opposite directions as we compare it to the precious metal. Energy sector is again softer across the board, showing a same story as we had yesterday. There is nothing major going on. So precious metals up, and energy sector is down, so it's a pretty much mixed bag. Now the bond market has strengthened. Let it just get loaded. All right. So as you can see, a US 10-year yield is shown some sort of a strengthen. Same story with the German, Canadian. If we look at the UK, so this bond yield market is just showing a one-sided scenario, that is risk off sentiment. So that's why it is pretty much mixed, because bond market is showing us that there is a risk off. And if we look at the S&P, or let's just say EMEA, NA equity market, just clearly showing on a risk on sentiment. So it's pretty much mixed bag across the board. Now talking about FX. Okay, why it's taking so much time? All right, so Last night we had a RBNZ decision, and the bank were less hawkish than it was on its prior meeting. Here's the article, and let's talk about it. So last night RBNZ leaves its cash rate on hold as expected, 5.5%. But here's the key thing that market took it as a less hawkish. That committee expecting headline inflation to return to within the 1 to 3% target range in the second half of the year. Okay, so they are talking about that this year they consider that the inflation will come back in their target range 1 to 3%, which eventually means that they can start thinking about cutting their interest rates. And also the last point, the extent of this restraint, what restraint at the monetary policy restriction will tempered over time consistent with expected decline in inflation pressure. So the as the Amanon Sheridan says, the easy read version of this is inflation goes down, rates go down. So it was pretty much a less hawkish uh, commentary in the statement they gave. We haven't had any press order yesterday. However, they just released OCR and a little bit something in the statement. Statement wasn't the full statement. It's just a simple statement with clearly showing a less hawkishness. So that's why the New Zealand just got tanked and got sold off across the board. Pound is the strongest currency, and there is no clear reason for that. Yen, we know from a carry trade perspective, has been the lowest Swiss franc because the bank is clearly dovish. CAD is also the third one, following as a weakest. However, it's just consolidating. We do know that Canadian bank cut their first rate and also gave us the signals that they're gonna do more if they see cooling signs of inflation and also cooling sign of labor market. Dollar is flat and Aussie is strong. As I said, there is no clear bias why Aussie and pound is the strongest. Clearly, we don't have the reason right now. So that's it, my friend. As I said, the risk is pretty much mixed across the board, and New Zealand is the weakest, pound is the strongest, and we also having Fed Powell coming out at 10 a.m. Eastern time, and also we are having Bank of England pill, and also Bowman Bar also speaking later tonight, later today. So these are the things just to keep in mind before putting any sort of trade. So I hope you guys have a good trading day, and I see you tomorrow. Thank you so much. And also at the end, if you have any questions, don't hesitate to let me know. Just comment down in the comment section, and I will try to get back to your comments, and I will try to answer those questions. Thank you so much. Bye bye now.